And in our world business news, following a meeting of the Federal Reserve, Chairman Ben Bernanke acknowledged that the U.S. recovery continues, but at a slower pace than hoped. The Fed therefore lowered its growth forecast for this year to a range of 2.7 to 2.9%, down from previously anticipated 3.1 to 3.3%. Meanwhile, the U.S. Central Bank raised its unemployment and also lifted its inflation expectations. Bernanke blamed high oil prices and food prices, as well as the impact of the Japanese earthquake for the slowdown. However, the negative effect will not be long-lasting and growth is going to pick up in 2012, he added.
We don't have a precise read on why this slower pace of growth is persisting. One way to think about it is that maybe some of the headwinds that have been concerning us, like weakness in the financial sector, problems in the housing sector, balance sheet and deleveraging issues, some of these headwinds may be stronger or more persistent than we thought.
Bernanke also said the Fed would end its second round of stimulus, a bond buying program called QE2, as scheduled. Plus, he kept the main interest rate target rate at 0 to 0.25% for an extended period. To talk about this further, we're now joined by Bruce Powers, Head of Research at Trust Securities. Welcome to the show, Bruce.
Thank you. Good to be here.
Now that U.S. economic indicators have shown signs of weakness, the Fed lowered its growth forecast. Why is there no QE3 program, another stimulus program?
Well, the point of QE2 is to spur growth by providing extra liquidity. It helped to prop up the stock market and help the economy a little bit, but now expectations are for further weakening. Who's to say that if we have more stimulus that it's actually going to work, since QE2 really hasn't worked that well. Now, the point of all this is to get the economy going without the extra stimulus. So that certainly hasn't happened since now we have an outlook of weakening. Now, the risk is that this, if they do further stimulus with QE3, they're going to stimulate inflation. And inflation is now at 3.6% in the U.S. and is at 1.5% before QE2. Now, even though the Fed has said there's not going to be a QE3, I think if we see a slowdown in the U.S. economy beyond their expectations, they're going to feel the need to do something. The benchmark rate is already close to zero, so they can't lower that anymore. So their only option is more stimulus in the economy.
So it waits to be seen. Now, tell us about what impact that has for the UAE economy if the world's largest economy, the U.S., is showing signs of weakness.
Well, I don't think that there's much to worry about in the short term. But in the medium term, if we continue to have weakness in the U.S. and there's also weakening in Europe and in Asia, then that can certainly continue to drive oil prices lower. And that will affect the UAE since about 30% of GDP comes from oil. Also, further weakening of the dollar due to a slowdown in the U.S. economy is going to help drive inflation higher in the UAE. So oil and the dollar are two areas to watch for the impact on the UAE.
We'll do that. Thanks for coming in. Have a good weekend, Bruce.
You.
India plans to set up a $557 million overseas ports company, which will be modeled on DP World structure. The Indian government will found the company to help boost international trade, two people familiar with the matter told Bloomberg. It aims to help Indian shipping lines win a greater share of international trade by giving them easier access to overseas facilities. State-controlled Shipping Corporation of India, the nation's biggest shipping line, also plans to buy as many as 110 vessels during the next 8 years to benefit from a pickup in global trade. The warning lights are flashing red on the Eurozone's debt crisis, Jean-Claude Trichet, head of the European Central Bank, said on Wednesday. On a personal basis, I would say, yes, it's red, Trichet said late yesterday in Frankfurt after a meeting of the European Systemic Risk Board, referring to the group's planned dashboard to monitor risks. He added the link between debt problems in some European states and banks is the most serious threat to financial stability in the European Union. Meanwhile, the Greek cabinet has approved draft legislation spelling out the details of its 5-year austerity plan, a condition to receive more EU IMF funding, according to a Greek government official. The implementation law will be submitted to Parliament on Friday and must be voted on by the end of the month in order to meet the deadline for the next round of EU IMF funding to be paid out. Prime Minister George Papandreou aims to get parliamentary approval for a package of spending cuts, tax hikes and state asset sales by June 28th and implemented by July 3rd to secure 12 billion euros of aid. Before we go, here's a quick overview of the Asian equity indices as well as the oil and currency markets. And after that, Mona Nasser is back with the news.